So we are Group 7 and we are analyzing Cisco Systems Inc. To start off, Cisco Systems Inc. is a technology company that engages in the design, manufacture, and sale of internet protocol-based networking products and services related to the communication and information technology industry. So Cisco Systems Inc. gains competitive advantage through innovation, specifically hardware and software components that are adaptable across different product ranges. Cisco's competitive advantage stems from the versatility of its products offered to its customers. Cisco uses advanced technology in the creation of its products, so with this innovation, the brand has created more of a customer loyalty base. Cisco Systems Inc. strategy falls into the category of differentiation. Michael Porter's generic strategy of differentiation is a strategy in which an organization seeks to distinguish itself through the quality of its products or services from their competitors. So by integrating innovation, Cisco Systems Inc. hopes to differentiate itself from the competition and communicate concerns consumers face. So for instance, Cisco Systems Inc. expanded its product line after researching consumers' shifting preferences in order to set itself apart from rivals and broaden the industry's potential for growth. Cisco Systems Inc. has created a solid and devoted consumer and customer base because of the differentiation and cost leadership. Because Cisco puts customers' needs above all else, they use innovation as a tool to satisfy customers and boost their sales. It comes to a conclusion that differentiation strategy works best for Cisco Systems because customers believe Cisco's products are worth every penny. So this is a result of a decentralized decision-making, which allows for greater flexibility in meeting customer needs. So innovation is a huge advantage in their competitive advantage. They use innovation to gain this, and differentiation in Michael Porter's generic strategy helps them with this as well.
I'll be going over Cisco's internal environmental analysis. Starting off with Cisco's strengths. The first strength is that Cisco is one of the most well-known companies for its computer networking products. From its early startup in 1984 till now, the company has made several advanced technologies that has allowed for it to build up its brand value and earn its customers' trust. This makes it one of its most vital strengths for the company. Continuing on is that due to Cisco's continuing advancement in self-developed technologies, the company now takes the leadership position in the market segments that it is involved in, which makes this another strong point of the company. The involved market segments include specializations in switches, routers, and cybersecurity. Its third strength is that within the recent years, there has been an increased internet presence and the need for more data usage, which means there will be an increase in more demand for high-speed devices, cloud computing, and data centers. This increased demand for the services and products mentioned is an excellent outcome for Cisco, since the company already has a vast presence in the wireless and networking business segments. Lastly, the company employs an aggressive growth strategy because its consumer base already has its revolving needs and wants. The strategy involves always seeking and acquiring new and well-developed strategies to help satisfy its customers' needs. Continuing on, I'll be going over the weaknesses of Cisco. Although this company has its strengths, there are also weaknesses that it needs to address. One weakness in particular is its supply chain issue right now. Since the pandemic, as well as current economic and political issues, it has all affected the manufacturers of Cisco and has caused delays in production, which in turn caused distribution issues and has slowed shipments. Since there is a weak supply chain, Cisco has issues meeting customers' demands. Another issue of the weak supply chain is that it has caused Cisco to recall many of its products due to production defects. Aside from the supply chain issues, Cisco also experienced its steadily declining market share in recent years. One of the main factors influencing this decline in the increased competition that enter the market is due to Huawei and Jupiter, it's Cisco's competitors. Cisco's primary product is its routers. However, its routers are now seen as less innovative than compared to its competitors. And this decline in the router market raises a huge concern for Cisco. Now, continuing off of that, another weakness of Cisco is that the company must be aware of its intensifying competition from the other companies like Huawei, Juniper, and Arista. Although Cisco has been the leading networking hardware provider for the past 2 decades, its competitors are now also offering a similar array of products and services of similar quality. Those competing companies also have established themselves just to be as credible as Cisco. And to address this, Cisco will need to think of alternative solutions to keep its leading position. Lastly, another weakness of Cisco is that roughly 2/3 of the company's business comes from the United States, meaning that due to its dependence on the US market, the company will be significantly affected depending on the state of the US economy.
For the external environmental analysis for Cisco, the most important factors of Porter's 5 forces model that apply are the threat from substitute products and rivalry among existing players. Because Cisco is in a very highly competitive market, it is crucial that they strategize ways to outperform their competitors. They can focus on 2 forces to help build competitive advantage. To overcome the threat of substitute products, Cisco must focus on not only being product-oriented, but also service-oriented. The needs of the customer must be understood. To deal with rivalry among existing players, Cisco should build sustainable differentiation. Additionally, they can benefit from collaborating with competitors to increase the size of the market. Cisco's opportunities reside in market growth and cloud security growth. The global software market is continuing to expand each year. This allows Cisco to take strategic measures to maximize expansion. Cisco's threats reside in competition as well as with new technologies. Some of Cisco's top competitors are Amazon Web Services, Alcatel-Lucent, and Microsoft. These are all prominent companies in the network and communication devices industry. They are constantly evolving and finding new ways to innovate and keep the competition high. These competitors have means to present a threat to Cisco's developmental and innovative accomplishments. This is why Cisco should be rapidly innovating new products and devices to stay ahead of the game. The top 3 environmental driving forces for Cisco are global governance of the internet, internet-related growth, and a new generation of internet users. According to Cisco, there is a bit of a lack in global governance of the internet. This results in more abundant disruptions like fraud, theft, and deception. These cause major problems and pressure, especially in this industry. Another external driving force are the next generation of internet-savvy consumers. This generation has a different approach and understanding of the internet, and Cisco will need to continue to be aware of that to adapt to customer needs. Finally, the most extreme driving factor is internet-related growth. More and more people across the world are accessing the internet and integrating it into their daily lives. This means Cisco will need to adapt to more efficient ways of service and tending to the needs of their growing number of consumers.
The financial analysis of Cisco Systems has reported a revenue of $13,632,000 for the first quarter of 2022, which resulted in a profit of $2.67 million. Comparing these results to the previous year, we can see that there has been an increase in revenue from $12.90 million to $13.632, but a decrease in profit from $2.98 million to $2.67. As of today, the company totals $93.05 billion worth of assets and $52.78 billion worth of liabilities. These numbers have been staying pretty much constant in the last couple of years. Over the last 12 months, when it comes to profits, the company displays a gross margin of 62.23% and operating margin of 27.01% and a net profit margin of 22%. All these values are very positive and indicate that the company is expected to continue or to maintain increased profits in the years to come. The inventory turnover ratio has been decreasing quite a lot in the last year, from 11.5 a year ago to 8.3 today, which indicates the company is either not selling well or the company is producing too much for the current level of sales. The total debt to equity ratio equals 22.05%, which is a pretty good value, and a return on equity of 29.3%, which can be actually considered excellent. On the other hand, the company presents an operating cash flow of 15.91%, which is not great at all. When it comes to shares, the company is valued $48.40 per share and has had a decrease in its basic earnings per share from $0.71 a year ago to $0.65 as of today. Finally, the current ratio equals 1.43, which is a clear decrease from previous years, which indicates that either liabilities have been increasing or assets have been decreasing. Overall, even though some ratios still appear to be positive, I would argue that the company has had a tough year, as it appears that some ratios have been decreasing in its value, which indicates that some changes should be made in the near future.
I will now be going over Cisco's strategic concerns. Cisco's most vital strengths are its strong market recognition and brand recognition. Due to these strengths, the company should be more concerned about taking advantage of these strengths as the company now seeks out new opportunities to grow and expand into other market segments. While Cisco might still be in the leading position in these dynamic markets, the company must stay consistently aware of its competitors' movements. The competition from its competitors has caused Cisco's market share in the router segment to decline steadily. And in order to maintain its number one position, the company needs to be more innovative and up to date on what its consumers want. Another concern the company needs to be aware of is a threat that constantly affects this business. The threat of the company needs to be aware of most right now is in what direction the U.S. economy is currently moving in. Since more than 50% of its revenue is earned from the United States, if the U.S. economy were to take a downhill turn, it would affect the company negatively and it would most likely lose its top position in the market. Another concern regarding Cisco is shifting away from network hardware equipment. The tech industry is rapidly evolving, which has caused the company to see the need to shift away from hardware and focus on software and services to compete with its competitors and to keep up with the ever-changing market demands. As mentioned above, Cisco is a company that has immense growth opportunities, and it is a company that has a firm brand name and customer base. However, aside from the above-mentioned concerns, the company needs to develop new ways to expand its brand value outside the United States. By increasing its brand value outside of the United States, it will be able to help decrease the high threat levels that the company might face by only relying on the US market. This way, by dividing up its threat level, it will help increase the company's success rate.
Our top recommendation for Cisco to enhance competitive advantage would be to actively and consistently innovate new devices. The strategy to achieve this recommendation would be to do more studies and analyze the upcoming generations, current customer needs, and what works for competitors. We already know that the newest generations are the most technology and internet savvy. Some things to take note of during research are demographic analyses, user habits, and frequency of use. Cisco should also be mindful and study what its competitors are doing, but most importantly, what is working for them. As mentioned before, there is potential for Cisco to benefit from collaboration with competitors. When it comes to rapid innovation, Cisco should be thoroughly attentive to their customers' needs and desires. While product purchases are extremely important to the strategic efforts, so is customer satisfaction. One of the most effective ways to gather data on this element is through extensive market research. One method to carry out this plan would be to create a survey and distribute it to current customers. While surveys can fall short of having truly accurate results, it may still be a good place to start. This would allow Cisco to be aware of elements to fix, keep the same, and implement. While these seem to be good recommendations for Cisco to improve their strategic efforts and competitive advantage, there are usually potential consequences when taking these measures. For example, in the case of collaboration with competitors, there is always a chance of the effort resulting in increased rivalry. The companies are already rivals, so it would have to be an honest and intentional collaboration to benefit and better both companies. If something goes wrong, there may be more of a problem than there was before. However, if things go well, there is a presented opportunity to improve innovation and learn from each other's successes. Becoming aware of competitor strategies, the expectations of the newer generations, the service needs of current customers, are all things that would greatly improve Cisco's approach to competitive advantage.